Well, g'day there traders and friends right around the world. It is James here on behalf of Pivot Point Trading, bringing you this very important, this very significant weekend market update. The reason why it is so important is because, surprise, surprise, here we are once again dancing all around this very, very important level of support. It's also a very important level of support because it is the neckline for what could be a little bit of intermediate reversal for the overall market. You can see right here we have what we call a double top. We've made a high for the month of March, we've made a lower high mid-March, and even most recently, this most recent week, which has just passed, we've actually made or established the second lower high. This is very, very important because the sentiment at this particular moment in time, when we're analyzing the markets, understanding what they can do and how they're set up to move for the week ahead, it is very, very negative for the immediate price action of the overall market. This market has been on a bullish tear for years now. It's been very, very overextended. It seems as if it is exhausted, and it looks as though we are finally going to see the correction, which is very much needed across all three of the US markets. Now, it seems as though on Friday, we may have the impetus to push this market over the edge. What I mean by that is we've really struggled to hold selling pressure around these levels. Whenever we've hit this level, it's really being a buying opportunity, albeit a very volatile and unsustainable buying opportunity for many people out there. But given, of course, the non-farm payrolls for the month of March, which were released on Good Friday, you can see that since December 2013, we haven't had a print this low. Only 126,000 jobs were created. For the month of March, it will probably be revised down in a month's time when we get the true figure. But this has been the worst job adding period since December 2013. On top of that, if we just dig a little bit deeper, you can see also that we haven't seen a participation rate this low since February 1978. This was before women were really making up such a considerable portion of the overall labor market. Women weren't really encouraged or expected to work at this particular period in time back in 1970s. Now, why this is so important is because not only is this negative economic data news for the overall market, obviously the Fed has tied any future rate increase through to inflation, which is non-existent. If anything, it's deflationary pressure at the moment, but also the continued strength of the labor market. Now, if this is anything to go by, would you say that the labor market is strengthening, or would you say is it deteriorating? Now, I don't have a bias either way. I'm just calling it as it is. It's definitely deteriorating, or at least the March payrolls have deteriorated substantially. It's something that you need to pay attention to. And given where we are trading on the overall markets, here we are again with sentiment shifting. It's not as if it's just shifted as of Friday. We've got the third lower high for the month of March. We've been talking about a double top. We've been referencing this neckline. There are so many stocks in our top 13 individual trade this week. I've just gone through and I've recorded an hour and 15-minute class on trade setups referencing Apple, Amazon, Boeing Airlines, Baidu, Caterpillar, CVX, Facebook, Google, GoPro, all of these stocks. Goldman Sachs, new addition. We took out the FAS ETF, IBM, Netflix, and Tesla. This recording is online at pivotpoint-trading.com. You can access it if you sign up. I'd encourage you to go in and have a look at these trade setups because we've been patiently waiting for weeks now. It's been really a light sort of trading volume in the way of trade setups. But given what the markets are looking to do, looking at these individual stock setups, it looks as if a lot of these individual stocks are really set up to make that definitive move to the downside and at least see some form of a commitment to one direction or another. There always is the possibility for a market bounce at this particular location. I have referenced that also, but given how these stocks are presenting, how they are looking at the technical picture, and also adding in, of course, the most recent economic data it's referencing the March non-farm payroll number and having a look at the futures, how they moved once that figure was released to the market, it really doesn't look optimistic for the next 5 trading sessions. Things can change, of course, but if you're learning how to trade the market, if you're a novice and you don't understand how all of these things come together, if you don't understand sentiment and how just important investor and trader sentiment is on market movements, the psychology of why people buy and sell, I'd really strongly encourage you to get into that Pivot Point Pro Analysis workshop. Have a look for yourself and just see how the trade setups form and how to manage them and how to learn how to trade correctly. So many people have no idea what they're doing and they don't see the results that they want to see in their trading accounts because of that. It's unrealistic to try and tie through exceptional results if you don't necessarily know what you're doing and how these things align. Of course, some weeks you can be bullish, other weeks you can be neutral. We have been largely neutral for the past 3 weeks, but also cautiously bullish given this most recent intermediate chart topping pattern. Right now, however, for those of you who listen to me on YouTube and are not in that class, I'd strongly encourage you to have a look at that analysis class. An hour and 15 minutes this week of trade setups, trade analysis, which you can go away and learn and apply to other stocks, not only in this top 13 individual trade list. When I'm talking about intermediate price data, all I'm referring to is a correction. I'm not talking about a broad market rollover. I'm not talking about the transition of a bull market into a bear market. It's nothing like that whatsoever. We're just saying to ourselves that there's weakness in the market. We've got lower targets on the market, and we also have buying opportunities also in the market in the event that price sells off and we start, seeing the right signals at the right location to usher, looking at, new bullish trades. At the moment, however, more or less they are negative. It may take, another couple trading sessions. It may take another week. We do not know how much longer it's going to take until we see commitment one direction or another. But going off what's in front of us and, all of these other factors, which obviously have a big influence on the way the market moves, most importantly, sentiment at the moment, I'd strongly encourage you to at least, if you're a trader, really, not so much be going out there looking for bullish trades this upcoming week, really hedging if you have long-term portfolios in the event of a sell-off, which you just cannot stomach. And what I mean by hedge is looking at opening put positions on different types of stocks which you own, or at least opening up market exposure in the event that the market does sell off. All of these types of factors. You can email me success@pivotpoint-trading.com. But again, if you're out there and you're a novice trader, you're learning how to trade the stock market, it's very dangerous, at least, to be going into weeks such as this with a very optimistic outlook on the market. You can get burned. And, it's very, very quick, at least, that you can blow up a trading account. It doesn't matter what size it is. You need to, of course, obey strict money management and capital controls. At least I can give you a framework and at least explain this analysis to you so you can get a very good understanding of what to expect each and every week as the market moves. And as the market changes, I will bring those changes to your attention. One final point that I want to make in this weekend market update is the fact that I understand a lot of people follow me on YouTube and they try and follow stocks based on green entries on my charts and targets and things like that. What you're doing is you're missing out on the bigger picture. All right. What the point of Pivot Point Pro is to explain this to you. You can sit over my shoulder. It's a recorded class. You can go on and watch it anytime that you please. But it's more so for you to understand how you bring this analysis together and you formulate, obviously, an understanding of a trade setup. You have your entry, your targeting, and your stop, and you have all of these other factors in the world of technical analysis, which you bring together, which formulates the trade setup. If you're simply on this YouTube channel trying to place entry, open orders based on green, entries on my chart, you're missing the bigger picture. The goal in Pivot Point Pro is to share this with people who want to go out and become autonomous in the world of trading and who want to go out there and of course, do this for themselves in the future. It's no point following along and trying to, pick the next hot, stock tip from someone who's got, no credibility. It's more so bringing the entire trading landscape together and showing you how you can apply this to not only our top 13 individual trade list, but any stock which you choose to trade. That is the bigger goal of Pivot Point Pro. And that's what I do and share with people in that analysis workshop class. So if you want to get involved, email me success@pivotpoint-trading.com. So if this market analysis, or what was a market analysis, has gone off topic a little bit, but I've received a few emails from people saying, what's the difference between YouTube and Pivot Point Pro? The difference is the actual analysis. If you think this analysis is good, or if you're interested by this analysis, just looking at, these little patterns here and bringing in, the non-farm payrolls, you're missing out on all of these stocks right here each and every week. And this week upcoming is one of those weeks that you wouldn't, which I'd encourage you not to miss out on, because there's a very good chance that we could see the Dow Jones, trading down as low as 17,200. You could see the S&P 500 trading as low as 1,909. You could see the NASDAQ again trading as low as 4,750. These are all realistic targets, and obviously for those markets to move, the stocks are going to need to move as well. And looking at the majority of these stocks, we've got some incredible trade setups. I think maybe 8 or 9 of our 13 are set up ready to go, which just look really, really good for the week ahead. And that's it. I mean, we don't have to look at it intraday. We have the analysis, we close it. We go through it when the markets close. We mitigate all of the noise out there in the markets, which of course you're bombarded with each and every day. It's just the best way to trade the market as a swing trader. It's not day trading, it is swing trading. It is analysis, it's real world, real time, real results. So I just wanted to share that with people if you are confused. YouTube is not about analysis, Pro is all about analysis. And until you have a look at it, you're really missing out on learning so much about the stock market and how trades move. What I'll do now, I'll finish this recording. I will update it, upload it. And if you want to have a look at that class, just have a look at it. Go to the website. You can follow the link below. If not, get in contact with me. I've said the email a couple of times. You can also check the email down in the description box below. All the best, traders and friends right around the world. Have a fantastic long weekend. It is actually still Good Friday for our friends in the US, Canada, and Europe. So please enjoy your weekend with friends and family. I'll see you all during the week for a recap on market moves which take place throughout the week in the markets. All the best, everyone. Goodbye.